Thanks for joining us. Want to just kind of run through a quick presentation here with all the excess moisture issues going on down there in southeast Kansas and southwest Missouri, and talk about some various options you might have depending on your situation. So as we go through this, I'm going to talk a little bit about replants, failed crops, late planting, prevented planting, and then touch just a little bit on marketed grain issues. Now, first off, just kind of review plant dates here. So I'm going to focus mainly on what's going on with corn. So if we look at these yellow counties here, final plant date for corn for all of those counties is May 15th. As I go through this, I'm pretty much focusing in on those counties. This same scenarios will play out eventually in other areas if it stays wet, but as we move north, we've got another 10 days at least before we get into this situation. Final plant date for corn down here is May 15th, and there is a 20-day late planting period on corn. So, all right, first off, replants. So a replant is when you planted a crop but did not establish an adequate stand or was destroyed by weather, and you're going to replant that land to the same crop as was originally planted. That's what a replant is. Crop insurance does provide coverage for that and provides a payment, pays a different amount for each crop. For corn this year, for 2020, it's going to be about $31 an acre, and for soybeans, about $27.50 an acre. So, field, of course, must be inspected and released by an adjuster before you destroy it. Important to remember that. And you must be replanting either 20 acres or 20% of the unit to qualify for a payment. So you're just going out and replanting 1 acre, probably not going to qualify for a payment. But the other thing to keep in mind, I'll touch on this again as we talk about preventive planting, but that 20 acres in the unit, if you're using enterprise units on your crop insurance and you have 1,000 acres of corn and you've replanted 20 acres, but it's a bunch of 2 or 3 acre patches on a bunch of different fields, you might still qualify for a replant payment when you add all those spots up. So keep that in mind as you're looking at that qualifier. You do not lose any coverage if you have to replant after the final plant date. We always go by the initial plant date. You will have to replant, if possible, within the first 10 days of that late planting period, if you get a chance to get in the field and do it. After that, though, it's up to the insurance company to determine if it's still feasible to replant that crop or if it's too late and we're going to convert it over to a failed crop claim. And then just let us know, or your agent know, if you think you're going to have any replants. Let them know as soon as possible so they can get a claim turned in and get you in touch with an adjuster. I always tell people, as soon as you know you're going to have to, even if it's still muddy and you couldn't get in for a week, let us know. Might as well get you in touch with the adjuster. And you can only receive 1 replant claim on the same ground in a crop year. So hopefully it doesn't get that bad, but it's something to keep in mind. So that's replants. Now move on to failed crop situations. So this is a crop that either did not establish itself or has been destroyed by bad weather after initially establishing itself, and it's too late to replant that ground to the same crop. This essentially works like any other production claim, unless you are wanting to fully destroy that crop and do something else with the land for this crop year. If you plan to destroy what is there, of course, it must be inspected and appraised and released by an adjuster. And the adjuster must determine that it is not feasible to replant, as we touched on a little bit ago. And just something to keep in mind with this too, because it can get difficult early stage trying to determine what an appraisal is on these crops. So just so you know, the adjusters have these charts that they go to in these situations. And so what this is to try to determine the percent of yield potential that's still out there for a corn crop that's been damaged, looking at stand reduction. So on the left, we have your original stand. So I'm going to look at what a scenario would look like if you had originally planted a 30,000 population. And when the adjuster goes out there and does counts, finds that there's only 15,000 remaining, that still shows a 75% yield potential. So only a 25% yield loss at that point in time. So it's not a 1-for-1, even though you lost half your stand. And then this is the chart on corn that gets used through the 10th leaf stage. Now past that, they move on to something different. But just keep in mind, it's not going to be as simple as a 1-for-1 stand reduction situation. So if you plan to destroy the failed crop, though, and plant that land to another crop, you have 2 options. You can take a full claim on that failed first crop based on the appraisal and leave the second crop uninsured, or you can take 35% of the failed first crop claim and go ahead and insure that second crop. If you do that, then if the resulting claim on the second crop is actually less than the remaining 65% of your first crop claim, they're going to go back and pay you the remainder of that first claim. So you end up getting whichever is the highest. And just to kind of look at how we might walk through a situation like this when you're trying to figure out what to do, I think, can you guys see that spreadsheet? Yes? All right, good deal. So this is a tool that we built to try to evaluate these kind of decisions. So the scenario I put in here is your first crop is corn. You have 140 bushel APH, 75% coverage level. Our base price is $388. You have $407 an acre coverage. And we're going to say that the first crop appraisal was 20 bushel per acre. So the full claim on the corn would be $317, about $318 an acre. 35% of it, 111, 65%, 207. And you are going to go out there and try to plant beans. So you're trying to decide, do I want to take the full corn claim or do I want to take part of it and insure the beans? So if the beans have a 40 bushel APH, 75%, 917 base price, you have $275 of coverage on those beans. Put in an $8 premium, that gives you $267 of coverage minus the premium. So you're kind of looking at the trade-off between this, the remainder of that claim, and this potential coverage on the beans. So this calculates then the maximum gain if you insure the beans. So, the most you can be better off if you insure those beans is $60. The maximum loss is going to be the premium cost on the beans, so $8. And then down at the bottom, it can kind of shows in with various outcomes how that looks. So red is where you wasted the premium to insure the beans. Green is where it ended up being better off. But you can kind of see, if that first crop appraisal is pretty low on the corn, it very well might make sense to just take that claim and leave the beans uninsured. But it depends on a lot of factors. And the other thing is sometimes at the time when you're making this decision, you don't know this number exactly. Maybe they're going to make you leave a strip out there and come back and appraise it at a later date. So sometimes that first crop yield is also an unknown at this point in time. So, but this is how we try to help clients walk through that decision and decide what the best option is. All right, back on the PowerPoint, guys. All right. Okay, so with failed crop decisions, then they're fairly straightforward usually if you're in optional units. However, if you are in enterprise units where you're combining all of your farms and the county into one unit, it becomes much more complex. So let's look at an example that somebody could easily be in. Let's say you have enterprise unit coverage on corn. You have 500 acres of corn in the ground currently. 450 acres of it looks pretty good, but you have 50-acre field that looks terrible and needs replanted or needs something done with it. By the time you're able to get back in that 50 acres, you'd really rather plant it to soybeans than replant it to corn. Okay, what should you do? So this is where the decision gets quite a bit more complex. This is a tool we have to try to look at what we would call a partial unit failed crop. But it doesn't give any clear answers ever, unfortunately, because you're dealing with a lot of unknowns. But put the information in here for the first crop. We have these 50 acres that are failed, 20 bushel appraised yield. We have to put some sort of an estimate of what we think the 450 acres is going to yield, projected harvest price. And then we have to look at what the bean coverage is going to look like, not only on those 50 acres, but on all the rest of the beans if they will be combined as well. And see what that might look like. So, these situations get really complex, and I highlighted in bright green here, 5 variables that are complete predictions at the time you're trying to make this decision. You're trying to predict what your corn crop and bean crop is going to yield, which is pretty tough to do. So this gets messy, but we try to do whatever we can to help put information in front of you to make that decision as best as you can, at least. Make an educated guess as opposed to just a pure guess, I suppose. All right. Okay, so moving on from failed crop, then I'm going to review these plant dates again real quick. Again, May 15th on corn, these counties here that we're focused in on. Other crops, we're still a ways away, June 20th or June 25th before we're worried about grain sorghum final plant date. And down in this same area, June 30th before we're worried about beans. So we have a ways off to be worried about that. But we are obviously now past 3 days past the final plant date for corn. So another option that you have is when it dries up and you can get in the field to go out and go ahead and plant the corn after the final plant date. You have 20-day late planting period to do that. Soybeans, it'll be 25. What happens when you do that is you lose 1% of your coverage for each day that you plant after the final plant date. You do still pay full premium. That doesn't lower your premium. And then any crops that are planted after the late planting period are insured at the prevented planting guarantee, or you can choose to not insure them. So just a quick example, if you have 140 bushel corn APH and 75% coverage, and you go out and plant on May 30th, which is 15 days late, your guarantee is going to be, your original guarantee is 105 bushel per acre times 85% to take off the 15%. Now your guarantee is 89.25 bushels per acre. So lose quite a bit of coverage in that scenario when you go out and plant that late. And then prevented planting, kind of the final option here. Crop insurance does provide coverage for being prevented from planting. After the final plant date, it is up to you whether you want to plant in the late planting period or file a prevented planting claim. So this is important to understand. If weather kept you from getting your corn planted up to today, and your final plant date is the 15th, and that's generally occurring in the area, you can file prevented planting and take a prevented planting claim. They can't make you plant for the first time after the final plant date. Like we mentioned with replants, you do have to have 20 acres or 20% of the unit that was prevented from planting to qualify. But as I mentioned before, keep in mind if you're in enterprise units that you can add up any wet spots that didn't get planted across all your farms to get to that 20 acre qualifier. So sometimes you might qualify for that without realizing it. The payment varies by crop, but it is a percent of your coverage. So for corn, it's 55% of your coverage. For grain, sorghum, and soybeans, it's 60% of your coverage. So corn, we're kind of focused in on that 55% number. This chart just shows what the preventive planting payments for corn would look like at various approved yields and coverage levels for 2020. So let's say, again, you have 140 bushel approved yield, 75% coverage. Your preventive planting claim on corn would be $224 an acre, minus whatever your premium is, of course. You are still charged the full premium, even though you're only getting paid out a portion of your coverage. As I alluded to earlier, must be generally occurring in the area, so you don't want to be the only person in the county that didn't get planted. You must be able to prove that you had inputs required to plant the crops, that you had seed on hand or fertilizer or access to it at least. We can never guarantee that these will be paid. Preventive planting situations can get a little sticky, but I think the way we sit in this region in general right now, from what we understand, I don't think there's going to be a big concern about qualifying for preventive planting. It sounds like it's a pretty widespread issue. And then preventive planting payments are calculated using only the base price. So like with revenue protection, if the base price is high or the harvest price is higher than the base price in the fall, your coverage increases. But with a preventive planting claim, that does not happen. And that does have some effects on marketed grain possibly. Your PP acreage must be reported on your acreage report, turned into crop insurance, and ideally, it would be reported to FSA as preventive planting as well. That's not necessarily a requirement, but it sure makes things a lot easier. Eligible acres for preventive planting are determined by the highest total acres of the crop planted in the county in any of the last 4 years. So what they're going to look at when working on a corn preventive planting claim is look back on your policy in that county. How many acres of corn did you plant each year in the last 4 crop years? Whichever one of those is the highest, that's how many eligible acres you have to file preventive planting on. Then we're going to subtract off however many acres you did get planted this year, and whatever's left is acres that you could qualify for a preventive planting payment. If you added new land to your farming operation this year, you can increase those eligible acres in some situations. There will be no preventive planting payment made on ground if any crop gets planted on that ground prior to the end of the late planting period for the preventive planting crop. So they can't force you to plant the crop in that late planting period, but you can't plant anything else during that time either in order to keep your preventive planting payment. To receive a full preventive planting payment, a cover crop can be planted on the ground, but cannot be hayed, grazed, or cut for silage, haylage, or baleage prior to November 1st. You can do those things after November 1st. And no crop can be planted on that ground that will be harvested for grain or seed at any time. So if you do either of those two things, either graze or hay a cover crop prior to November 1st, or plant a crop on that ground that's going to be harvested for grain or seed, then your preventive planting payment gets reduced to 35% of what it would have been. And we put a yield plug in the APH for the preventive planting crop that's going to be equal to 60% of your previous approved yield on the unit. So you're going to damage your, so in this situation, let's say that you have preventive planting corn, and then you go out and plant soybeans on that ground after the end of the late planting period. You're going to get a smaller corn preventive planting payment, and we're going to put a yield plug in your corn database that's going to hurt your guarantees moving forward to some extent. Whereas if you just leave that ground bare until this fall and possibly plant wheat, there's no harm to your corn APH for taking preventive planting. So for land that was filed as preventive planting wheat down there last fall, you need to keep in mind that that land, that acreage is going to work a little different in these situations. For one, you can't take preventive planting corn or grain sorghum on those acres that were filed as preventive planting wheat. If you're in a county, though, where double crop soybeans are insurable, you could possibly claim preventive planting on double crop beans if it stays wet through the soybean planting period and we get to that point and it's still not planted. And just as a reminder, within that yellow area with the May 15th final plant date on corn, these counties are the ones where double crop beans are insurable. Now in Missouri, the counties up here are as well, but they're not the May 25th corn final plant date, so we're not really focused on them yet. But so if you're in one of these counties and you took preventive planting wheat last fall on acreage and it stays wet for the next 6 weeks or so, you could file preventive planting on double crop beans as well. Okay, so here's kind of a timeline of what this all looks like then. So the final plant date was May 15th. We're past that. We have this 20-day late planting period that we're in right now. That ends on June the 4th. So if you plant corn during this time period, as we mentioned, you're going to lose 1% of your coverage for each day. You are, though, eligible to take preventive planting, but you can't plant any crop on this ground during this 20-day time period. Move past the late planting period. And if you plant corn, it's going to be insured at your preventive planting guarantee. And if you took preventive planting corn, you can go out and plant another crop, but the PP payment will be reduced and a yield plug will be used if you do that. You can plant a cover crop, and as long as you don't hay it or graze it or chop it for silage until after November 1st, there's no harm to your corn APH. So the question then becomes, what should you do? Should I take preventive planting? Should I try to plant this corn late, or should I just plant another crop? Not an easy decision, so we'll switch to another tool we have here to try to help evaluate that decision. Okay, so what I've got here is a scenario where your approved yield on corn is 140, 75% coverage like we talked about earlier, $407 of total coverage. Your preventive planting payment, net, the premium would be $212 per acre in this situation. So right now, if that corn isn't planted, you can take $212 preventive planting, leave the ground bare, plant wheat this fall possibly. You could plant a cover crop if you want, but you can't do anything with the cover crop until after November 1st, okay? So that's kind of option number one, is take this preventive planting payment. Then we can look at, well, what do our scenarios look like if we go ahead and plant the corn late? So I'm saying here now, looking at planting it 10 days late. So if you can get back in on May 25th, you're 10 days late, your new guaranteed yield is 94.5. And then we can look at a range of yields from that all the way up to 180 bushel per acre. Put in your expected price. I'm using $3 right now for an expected cash price. Some projected government payments if that becomes an issue. It was last year when we were looking at this, not really an issue right now. And then put in your projected cost of planting and harvesting that corn crop. And then at the bottom, you can see your net returns. So in this scenario, really all of the yield range up to 180 bushel per acre on corn shows to be less profitable than taking the full preventive planting payment. So, if this is what I was looking at as a producer, I would definitely lean towards taking that preventive planting payment versus trying to plant corn late. Now, some things that could change that, I've got all the cost in here, right? So let's say you already have your fertilizer down on that ground. Planting the corn isn't going to cost you any more. That's a sunken cost. If we take that out, then these numbers look quite a bit different. Now at probably 150 bushel corn yield or better, we're more profitable than the preventive planting, but still not by much. But that then kind of becomes our range of options if we decide to plant corn late, option 2. So option 3 would be to just give up on corn and plant it to beans. So again, we can look at a range of yields here, expected price, and cost of planting and caring for and harvesting that soybean crop. So again, our preventive planting payment would have been $212. To go out and plant beans, you're going to have about a 48 bushel yield or better to beat that if these are your costs. Okay. So again, depending on the situation, that might not look like a real great scenario. Definitely some downside there to end up worse off than the preventive planting payment, but some opportunity to be better off as well. And then the final option would be to take the partial preventive planting payment on the corn and then go out and plant beans after the end of the late planting period of corn. And in that case, you're looking at this same net plus 35% of a corn preventive planting payment, which is $74. So this range of options definitely gives you some potential to beat your full corn preventive planting payment. Again, the downside with that, one of the downsides is you are going to put a yield plug in your corn yield history that will lower your guarantees moving forward. But you have to look at that and how much it's going to hurt your guarantees and decide if that's really a significant cost. I lean towards, a lot of times, honestly, probably better off taking the preventive planting payment. Take the money, don't worry quite so much about what your coverage is going to look like going forward. So again, this is what we try to sit down with clients and walk through and help them at least make an educated guess about what their best option is. Of course, can't predict the future, so you never know exactly how things are going to play out, but at least try to look at some different scenarios and what might work. All right, then I think the last thing I want to touch on here real quick is contracted grain. So if you are using your revenue protection crop insurance policy to back up a marketing plan, and you're in this preventive planting situation or failed crop situation, some things to think about here. So once you've determined you're done planting, you need to determine if you have more bushels of the crop contracted or hedged than you have guaranteed under crop insurance based on your planted acres. If you do, I would suggest you need to look to offset those positions immediately, because, as we talked about earlier, preventive planting payments are completely based on our base price. They are not going to be increased if our harvest price comes in higher. So if you have more bushels hedged right now than you have guaranteed on your planted acres, you don't have those covered in a situation where prices start to increase. And then keep in mind too, if you do have grain contracted at prices that are higher than the current market, and you're looking to exit those positions because you didn't get the crop planted, you may want to have a long conversation with your elevator about how you get out of that. I would argue that they should probably actually pay you something to get out of that in that scenario where maybe you contracted back in January at prices that are much higher than where they are now. So keep that in mind too. So just in summary, I'd say if you do have ground that's eligible for corn preventive planting, I'd probably make it the last priority when you start planting beans as much as you can. I mean, I know that's more weather dependent and which places dry first to get into than anything, but just something to keep in mind. Maybe not prioritize that corn preventive planting ground. If you don't end up with all the beans planted, taking that corn preventive planting is probably going to pay more than a soybean preventive planting. But make sure that you have a corn preventive planting claim submitted with your crop insurance agent, because if you don't get that submitted here in the near future, we'll get into late June, don't get a chance to go back and get that turned in. So, preventive planting overall is actually not quite as complicated as we tend to make it sound. What actually makes it the most challenging to talk about is that really until you can get in the field, it's impossible to decide exactly what you want to do. We try to talk through with clients early on about different options and how that might play out. But really, until you know when you can get in the field and what things look like, it's hard to know exactly what you want to do. So again, if you can get in the field tomorrow, you might go ahead and plant corn because it's not that late. But if you can't get in until June the 5th, then that's a whole different scenario. If you can't get in until June the 20th, then that's a whole other scenario that you're in. So, we want to get this dialogue going with the client, but it's going to be hard to make a final decision until it's time to get in the field, basically. And then if you have preventive planting corn or corn that needs replanted, make sure we or your agent are aware of it immediately. I think that's all that I have. So thank you for joining us.